Is Boeing finally ready for takeoff, or is turbulence still ahead? Kevin Simpson from Capital Wealth Planning reveals why his firm is increasing its stake in Boeing, despite recent volatility and skepticism from other market watchers. Stay tuned to hear what upcoming earnings could mean for Boeing's future and your portfolio.
Would have sounded like a big stretch, but they actually delivered 42 planes in June. So we think they're heading in the right direction. We think the free cash flow is improving. We expect them to be cash flow positive next year, which is incredible. They're bringing down debt. They want to get that down to about $50 billion next year. Sounds like a lot, and it is, but keep in mind what this pipeline looks like. And from a valuation standpoint, because we think valuation matters, it's trading at about a 12 multiple. And if you compare that to a competitor like Lockheed Martin, they're trading around 20. So we think that there's value here. We think if they hit just a few lucky streaks, that the next 5 years can look a whole lot different than the previous 5.
Hang with me for a moment. You shaking your head? You don't buy the story or what?
First of all, everyone got some email about wearing a light blue and white high fashion thing.
The textured look today is very much in. So I have a little bit. You have none.
So I feel already the wrong guy at the poker table. No, I mean, I don't disagree. It's a very idiosyncratic story, though. I thought, you were setting up more as like a cyclical industrial call, like equipment or other stuff. I think Boeing isn't that.
This is a stock-specific call in his mind, but what about the broader story in yours?
I started off the year thinking, man, like earnings were down in absolute terms. There was actually an industrial earnings recession in the second half of last year, so we'll comp that in the second half this year. We'll probably get some earnings acceleration. You can anticipate that, and it sort of worked for the first few months of the year. You got a nice trade, but I'm worried the fundamentals, if a little bit of what Cameron's worried about is going to hit some tariff stuff, there's a lag. It probably hits this sector more than any other sector. So I just want to take a look and say, all right, what is the China competitive landscape, supply, demand? What's inventory levels are higher in a lot of parts of the industrial space. So I think it's more of a neutral for me, and I'd still rather own more financials or more tech than industrials.
What does your exposure to the space broadly look like, Kev?
We also own a full position in Caterpillar, Scott, which, again, is a little bit of a sneaky AI play. If you think about what these data centers are going to be looking like from a construction standpoint moving forward. Caterpillar also trades at a discount to John Deere. So our exposure here is Raytheon, Caterpillar, Boeing. Not to say that Adam's wrong. I mean, technology, people will always pay up for innovation. But in a diversified portfolio, we're going to look for opportunities where we see the earnings delivering. Revenues at Boeing last quarter were up 18% year over year. They report on the 29th. I think they can be really good. This is a company, literally, we sold this 5 years ago in our dividend strategy. This was during COVID. They wound up cutting the dividend late March. The stock was under $100 a share. And for 5 years, it couldn't get out of its own way. Got a new CEO in here who's really hitting on all the cylinders that we look for from a value standpoint. Adam was so bullish until I came in and brought the Boeing trade here. I didn't mean to bring the negativity.
The stock
I use their products 3 times a week.
It's ripped from the spring. If you look at a shorter chart, you get a great idea at the 3 month.